Today, Bitcoin continues to shed some of last week's gains, and Haun Ventures partner Chris Ahn discusses Stripe's acquisition of stablecoin platform Bridge. Bitcoin dipped more than 1.5% to the low $66,000 level, while Ether fell more than 3% to $2,537. And Solana remained relatively flat, trading just under $168. Okay, let's talk about the top stories for today. Binance executive Tigran Gambaryan is set to be freed from Nigerian custody. That's according to Reuters, which reports that a Nigerian court ordered his release yesterday after dropping his money laundering charges. Now, Reuters suggests that this was done to get him medical treatment abroad. There have been some reports of Gambaryan's health deteriorating since his detention in February. He and Binance were accused of money laundering, which both parties denied. Reuters says that Binance's separate tax evasion charges, which Binance has denied, do still stand. We reached out to Binance and Nigeria's Economic and Financial Crimes Commission, but didn't immediately hear back. Next, stablecoin giant Circle says it expects to see UK stablecoin laws introduced in months, not years. That's what the company's global head of policy, Dante Disparte, told CNBC in an interview last week. Disparte believes that there has been a recent sense of urgency to bring forward regulations around stablecoins and digital asset trading, as he says the UK would otherwise miss out on the benefits of the technology. He also believes the UK is behind compared to the EU, which began enforcing stablecoins under its regulatory framework for digital assets MiCA earlier this year. The Bank of England declined CNBC's request for comment. We also reached out to the Treasury, but didn't hear back right away. Alright, sticking with stablecoins, on to Stripe's acquisition of stablecoin platform Bridge for our main story. After that $1.1 billion deal was announced, crypto world's Mackenzie Sigalo spoke with Chris Ahn, partner at Haun Ventures. Now, Chris led the firm's early investment into Bridge, and he spoke with her about why it made such an attractive target for Stripe.
So Chris, you co-led the seed in Bridge while at Index Ventures and subsequently led the investment alongside Katie on behalf of Haun Ventures. Now, Bridge is only 2.5 years old. What stood out to you about this company that made you want to jump in as early as you did?
Hey, Mackenzie, that's right. I've known Zach and Sean since the start of Bridge about 2.5 years ago. And I was so excited about them that we also invested later when I joined Haun Ventures. And what's really special about Bridge is the team is exceptional. And they have a set of domain expertises that is quite rare to find still, which is at the intersection of traditional payments and finance, as well as in crypto. And so Zach and Sean, actually, this is their second company that they founded together. And the original one that they started, they had sold to Square many years ago. Zach later went on to lead consumer products at Coinbase, and then was most recently the chief product officer at Brex. And then Sean also worked at Coinbase, and then he was most recently a staff engineer at Airbnb. And so to find a team that really understands both crypto and traditional finance is still quite rare. And with Zach and Sean, they really had that expertise. I think the second thing that was really exciting about Bridge was they really saw stablecoins as a payment platform. And if we rewind back 6 years ago, stablecoins actually got their start as a crypto trading platform. And so when you think about maybe trading Bitcoin or Ethereum, as we all know, those two currencies are very, very volatile. And so when you're trying to trade Bitcoin for Ethereum, for example, that's two volatile currencies that you're pairing with each other to trade, and that makes it very, very difficult. And so stablecoins were created as a way to set a price for Bitcoin and for Ethereum. And so it was primarily being used for crypto trading use cases. And then in 2022, Zach and Sean really saw the opportunity to turn stablecoins into a broader payment use case. And that's where Bridge really ended up building their products.
And so Bridge is a stablecoin infrastructure company that makes it easier for businesses like SpaceX to accept stablecoins without having to directly deal with the underlying crypto rails. But still, $1.1 billion is a pretty hefty price tag for this deal. Talk to me about what Stripe gets out of the acquisition.
Sure. So Stripe is one of many players that when a dollar moves through the traditional financial system today, when a customer processes a payment using the traditional financial rails, Stripe is one of many players that touches that dollar. It touches Stripe as the payment gateway. It goes through Visa or MasterCard, which is the card networks, and then it goes through the banks. And so Stripe is somewhat limited and it has to share the economics with many of these players. And with stablecoins and with blockchains, you get to skip or potentially own more pieces of that stack. And so Stripe, I think, will have the opportunity to become even bigger and own more layers of that stack. And what Bridge has done is it's really pioneered the ability to use stablecoins as a payment method. And so I think for Stripe, they really recognize this as an opportunity for them to continue to expand their product surface area and to be able to harness this new technology with a team that's, as we discussed, exceptional and really meets the caliber of the team that they also have at Stripe.
So Stripe disclosed that its payment volume topped $1 trillion last year. It seems like they've really bought into this narrative of blockchain making global payments faster and cheaper, but why not just do it in-house? I'm thinking about PayPal here, which just launched its own stablecoin. I know you're not at Stripe, but why is this the type of tech where you can't just build it in-house?
I think for Stripe, it's a combination of three things. Again, it's that big vision, owning more of that stack. I think it's also about accelerating their roadmap. So you're right, Stripe has many talented people inside of their company. They have a lot of resources and they probably could build this with enough time. But I think for them, it's about accelerating that roadmap because this is a market that's growing extremely quickly. So just a couple of stats. There are over $160 billion of stablecoins that are in circulation today. And stablecoins combined are the 18th largest holder of US Treasuries. And this puts them ahead of countries like Germany and South Korea, which are very developed nations. And over the last 6 months, there was roughly $620 billion of monthly volume that were transacted using stablecoins. And this is up 50% year over year. So this is a market that's growing extremely quickly. It allows Stripe to accelerate their roadmap. And also, they get to work with again, really talented team that's been working on this already for 2 years and has a lot of the know-how to be able to service this market.
And to that last point, why Bridge of all the stablecoin companies that are out there?
I think Bridge has shown an exceptional ability to execute. This company is just 2.5 years old. The talent that they have, even outside of Zach and Sean, the two co-founders, are people that used to work at Square, at Coinbase, at Brex. Some of them actually all worked on USDC, which is one of the largest stablecoins, when they were at Coinbase, and so they really have that know-how and the ability to execute. And the team has moved extremely quickly to become one of the leaders in this market in a very short amount of time.
This seems like a bigger moment for stablecoins writ large. Talk to me about the larger significance of this deal and what it means for the industry.
For sure. So I think it's a lot of validation for the industry to have Stripe. So maybe just a history on Stripe and crypto. They were actually very excited about crypto being used for payments many years ago, let's say 10 years ago, with Bitcoin. And they actually paused crypto payments in 2018 because the infrastructure and the user experience wasn't quite up to their standards. And they reintroduced crypto actually earlier this year because there have been so many improvements that have been made under the hood in crypto that the payments are actually much faster, they're more efficient, and they're cheaper than what you might get using traditional financial rails. So this is just one of many steps that we foresee and stablecoins continuing to eat away at payments. And the tip of the spear right now is in cross-border money movements in real-time transactions and microtransactions, but we imagine that this is the tip of the spear and it will only grow from here. So I think it's an incredible validation for the industry. It's really starting to showcase stablecoins as a payment platform that's going to be used by both crypto native businesses as well as traditional businesses.
Okay, that's all for Crypto World today. We're back again tomorrow. We'll see you then.